Welcome to the Broken Pie Chart Podcast, episode 313. I'm your host, Derek Moore. With me is Mike Puck, Director of Business Development at Zega Investments. Mike, what's going on today?
I'm good, Derek. Thanks for having me back on. Good to be here and talk to everybody. Good start to the year so far, so a lot to talk about.
Well, all right. Good start to the year. Let's dig right into that. And there was a chart from, who is this from? This is Ryan Dietrich put this out on Twitter. And he said, a higher January and February could mean the bull continues. S&P performance went higher in January and February, 1950 to current. And what he did was he listed all the years when January, February was up, looked at what March does, and then looks at the final 10 months of the year and full calendar year. Besides 87 and 2011, every year where January and February was up, the median was about 11.4% up the next 12 months. And then as March down, there's only 1, 2, 3, 4, 5. It's like 6 out of, I don't know how many are on here. I'm not going to count them, but a bunch. So, all right, this says we're going higher.
Okay, so I'm looking this up, and correct me if I'm wrong here. Just quick search on Google here. It says if January's positive, since the end of World War II, when the S&P 500 has been positive during January, so I know we're talking about March, a couple other things. January, stocks have finished up 86% of the time for the full year, average of 16.2%.
Well, it's even higher in January and February. It's 96.4% of the time.
Oh, you're right. Higher. Okay. Based on this. So look, I'm a believer. I'm a believer here. We got a positive, at least positive January. February's not over, right? We got a week left. Little pullback in the market yesterday. And I think today too is not looking so great. So, but look, I'm a believer. January, positive numbers. February, we'll see what happens. But I think I'm buying this.
Oh, two hands. You're all in. Okay. All right. Just for the listeners, by the way, we buy and hedge. So, generally we are bullish. And although there are times when we're bears too. But one of the nice things about, you kind of look at something like this, like, oh, okay, should I buy? Should I sell? Like most people shouldn't do anything. In fact, we would make the argument, this is why we hedge, because we don't know if it's not going to be one of these years. But a market in motion stays in motion. Like that's kind of the idea. What I think is interesting about this market, though, Mike, is you're looking at, for a while, it was just the Mag 7. Like, oh, that was the complaint. Right. It's 7 stocks are driving the whole market. You brought up the fact just before on the pre-call that we do, the Mag 7 is only up like 1% year to date. The S&P 500 is up what? It's up, 4.15% total return, including dividends and everything. It is broadening out. It's broadening out right now. Like we're seeing the bottom up. We're seeing the bottom stocks, the bottom, 493 or, technically 492 or whatever it is because Google has 2. Alphabet has 2. But like this just isn't the Mag 7 anymore, Mike.
Yeah. So the Mag 7 have gotten so popular. And, for advisors out there listening is, I'm sure you've heard this, right? Everybody talks about Mag 7. It's so popular that in some of the research material that we use for the podcast, we see charts that, show S&P 500 and then S&P 500 X Mag 7. Or in just Mag 7 alone. So I'm just looking at some data points here from JP Morgan on the markets. And all right, so you got 24. How'd everything finish, right? So about 23% on the S&P. S&P X Mag 7 was only up 10% for the end of 24. Mag 7 up 48. So obviously Mag 7 led the way. I'm looking at the data now. Now, this is through the end of January. I know you said about 1%, right? Kind of February worked in a little there. So you got S&P up 2.7, X Mag 7 up 2.8, and then Mag 7 down 0.3 at the end of January. So to your point, is this the year for the equal weighted S&P 500?
I mean, maybe this is where, the fear is that the top 7 stocks are going to go down. But for everything else going up, it seems like that's the case right now. It seems like we're saying the Mag 7 is trading a little bit sideways. We still have Nvidia's earnings next week, and we'll get to that. We got to talk some option stuff on them. But yeah, I think this could be positive if we see a broadening out. And the other thing too, Mike, we're seeing is very quietly, like developed international. Let me give you some numbers here. So total return year to date, this is through, what is this through? Oh, the 21st. So that's today all right. So it's December 31st through today when we're recording this on a Friday. S&P is up 3.47%. RSP, which is the equal weighted S&P 500, up 3.41. But then you have emerging markets up basically 8%. EFA, developed Europe, up 8.29%. And by the way, throw in FXI, which is the China large cap ETF, up 19.43%.
Holy cow.
That was an unloved asset class for a while. I don't know if Europe can continue this, and maybe Europe would just, kind of unloved. I saw Eric Baltunas had tweeted out today that even though Europe is up, the flows they're not seeing the flows in the ETF world. He tracks that for Bloomberg. So yeah, but here's the other thing, Mike. International has been a widowmaker, meaning
totally
everyone who has, right? Everyone has like value, international, God forbid, international value. Like that's been the thing. Imagine, a lot of advisors, if they have people in that, they're doing their calls and they're like, why am I in this stuff?
Yeah.
It's been a widowmaker for a while.
It has been, look, I talk about this every year in the first few months of the year. We usually hit a couple conferences and, they always talk about a theme. What's the theme of this year? And I think I said this the last couple of years, right? One year it was value. The next year it was small cap. The next year it was international. And every single time those themes have been wrong. It's definitely got some legs at this point and seems like it's doing okay. We'll see how things end up. But the mid cap, small cap, let's not forget those, right? And what's happening there and the little pop they had in the pullback. So we'll see if this international holds on. My question to you, Derek, is nobody seems to be talking about this. I don't see it on CNBC. I don't see it on another podcast. I don't see it on Fox Business. Are we uncovering something that's kind of a little unknown? Are we early here to this international bull run?
I've heard some talk about it. I've heard some talk about China. I guess the thing is, we'll know when, all right, here's the contrarian thing. When we start to see this talked about more broadly, and maybe they're up more, maybe they're not. I feel like when people really start throwing money into this and the flows catch up to the performance, that could be a top or, a short-term top.
Sure.
But yeah. I don't know. How do you not own? So, all right, here's the problem. And I say this with the 60-40 portfolio. Mike, don't you think that when somebody is allocating assets and they're allocating dollars and they want to go into international, developed or emerging markets, so they want to go into value, you inherently have to sell the S&P 500. And that means you're selling the large cap.
Sure.
You're selling a lot of large cap. Like that's a conscious decision that they have to make. You're selling one asset, and good luck over the last 10 years, like selling the S&P and convincing people to go into emerging markets. It's not been a good trade.
Right. Yeah, I agree with you. You have to sell something to buy something else, right? So yeah, I guess the question too becomes the market weight of the S&P, right? This goes back to our equal weighted S&P theory is if the market weight S&P is going to slow down a little bit because Mag 7, right? Mag 7 is usually in the top 10 of the S&P, top 12 for sure. So if those slow down, the equal weight S&P does a little bit better. So if you sell your market weight and you buy a little international, hey, maybe if this is early in this bull run if we're in a second or third inning on the international market, maybe it is a good trade, but we'll see. But it's certainly off to a good start here the first few months of 2025.
All right. What's surprising, though, about the emerging markets and developed international and even China, although China, I mean, really that could be, is it a dead cat bounce or is it just a recovery here? Is the dollar. We've last week on the show, I know you weren't on, but I talked about the dollar and how it's, especially the trade weighted dollar in this high range. You and I have been talking about that a while. Like if the dollar drops, that means the foreign stocks, in theory, on a dollar weighted basis, should go up. And what's surprising about this outperformance is the dollar has been stronger. Like that's a headwind normally for international. So the fact that these company or these ETFs are outperforming, you got to understand. I mean, don't you think? Like it's surprising. Yeah. Like you think, oh, the dollar must be falling. No, the dollar's been pretty strong.
Yeah. So help me out here, Derek, and try to understand this. Right? Is that the dollar is getting stronger? Well, hang on. Let me back up. We did a webinar this week, and we talked about the dollar getting stronger and how that affects the S&P. Right? And so stronger dollar may slow the S&P down a little bit, right? Can you help me kind of unpack this one?
Yeah. So I think B of A put out something, and I remember seeing a Reuters article back in 2024. Every 10% year-over-year rise in the US dollar, they would expect corporate earnings, so the earnings per share, to take about a 3% haircut or a 3% hit for every 10% rise in the dollar year over year. And the reason why that is because US multinational companies, they're selling around the world. They are getting revenues in other currencies, but then you have to book those revenues, those sales and those margins in US dollars, because when you're a US company, you report earnings in US dollars. So everything sort of gets converted back. So that's a headwind. And we know that we've seen, I remember Microsoft, I forget which quarter it was, I think it was 2022. They said, our growth would have been 8%, but it was only 5%, but for, the strong dollar. So, and then the other aspect is, okay, if you're, just imagine, we'll just simplify this. You're a US investor spending US dollars and you buy a foreign stock, ABC stock. You used to be able to use XYZ, can't anymore. Some company actually took that. I think it was Square. So you buy this foreign stock. You're like, great, I like this company. And all else equal, if the US dollar gets stronger and the foreign company in their local currency gets weaker, that's a headwind. But if the dollar got very weak and you own this asset that's in foreign currency, just on a currency basis, you would expect to gain. And that's what's interesting about this period, because the US dollar has been strong. So, yeah, I don't know. I mean, we'll watch this, but I feel like when we start getting calls about this, hey, should I add international? That tells me that the cat's out of the bag and we're topping out. I don't know though. What do I know? If you want to buy these, buy them. If you don't want to buy them, you sell them. I don't think we've gotten those calls yet, right? I think that's why I'm just wondering if we're a little early on it on that one. So I just said something too, Derek, just why we're on international, right? Is what we get a lot of questions about this. Tariffs, right? How are the tariffs affecting things at this point? And what I just sent over, I know listeners can't see this, but tariffs have increased starting really in 2019, 2020, right? So to think that yes, of course, Trump's talking about some new tariffs and some change to tariffs and increasing some things. But remember, we've had some major tariffs on for a while now. This is not brand new. And I don't think it's really shaking the market as much as it maybe has done in the past. Right? Tariffs. This is not our first rodeo with Trump and the tariffs. So I think the market hates uncertainty, and so they maybe are kind of, they have some scenarios organized or played out of what may happen if tariffs increase, and maybe it's not that much of a shock to the market overall, internationally or within the U.S. I've been saying this for a while. Number one is there's been some studies that tariffs in their own right have not been inflationary. Now, there's an economics principle. What is it? Ceritis. Oh, I'm going to mess it up. I can't think of it. But all else equal. It's a Latin word for all else equal, and nothing is ever equal. But we haven't really seen them be inflationary. The other thing, and I've been in the contrarian camp on this because, it's good fodder for the podcast. When the U.S. dollar is getting that strong, the purchasing power for U.S. consumers or companies buying goods from other overseas, if the dollar goes up 10% and there's a 10% tariff, in theory, that crosses each other out because your dollar is stronger. So even if prices go up by 10% overseas, your dollar went up 10%. So it sort of equals each other out. That's a very back of the envelope way to look at it. But I don't know. I mean, I think it's a good point you bring up because a lot of people don't realize that many of the tariffs that went on during Trump, Biden actually kept a lot of those.
Right.
Like, many of those didn't go away. So,
right.
I'll put the audience to sleep if I go into this, but many companies, they have what's called a quota system. And we do it too. We do it with sugar. And what that means is you're only allowed to import a certain amount of foreign sugar, for example. And once that you get above that quota, the tariffs are quite penalizing if you want to actually bring in foreign sugar. And it's the same thing. Like Canada has a quota system on a number of things. And I won't, we'll put people asleep on this. But tariffs have been around, and quota. Sometimes it's quotas, but it's like, once you import more than X amount of tons of, ABC product, whatever it is, then it's like a 200% tariff. So you kind of have to get to this high watermark. But I don't know. It's just, we'll see. But I like the broadening out, Mike. I like that. And I think that's healthy. The other thing that I've noticed too is that, and this is from, who is this from? Refinitiv SG Cross Asset Research Equity Strategy. I'm not familiar with them, but they put out a nice chart. So let's talk about it. The S&P, it's basically titled Profit Margins Are Rising Outside of Tech Too. And Mike, one of the things they show is they give us a chart of the S&P 500, the 12-month trailing profit margin, which I'm eyeballing is right around 13%. And then they say the S&P ex-tech 12-month trailing profit margin also has been rising recently. It's right around 11%. So you look at this and profit margins are pretty high. This is good.
Profit margins are high. Actually, and I was looking, I have another chart that I'm looking at here around Mag 7 versus X Mag 7, right? And, showing profit margins as well. This is Q3 numbers, but Mag 7, 23.5 and X Mag 7, 9.3. So, and to your chart here on just trailing 12s, profit margins continue to do well. I'm referring back to our webinar here, right? And analysts seem to do a pretty good job of predicting where profit margins should be going based on our webinar, right? I think we had a slide on that one too. What's Jay always say? Earnings and interest rates, right, are driving markets. And I think if profit margins do good here, or continue to increase here, right, then that's going to help earnings. So all positive for the market.
Yeah. I mean, I think the common refrain, so those that are like perma bears or people who are, looking for reasons to sell the market, and they could be right. That's why we buy and we hedge. It's one of the core things we do. We have buffers. But Mike, one of the refrains that I've heard for many years is profit margins have to go back to the long run average. And I would say that, if you're looking at profit margins in the 1970s and 1980s, these are different companies. Like in the early, if you look in the early 80s, they were industrial companies that were in the top weighted among the S&P 500. Exxon, I think at one point, AT&T were the top rated companies. Those are very different businesses than Alphabet / Google, Meta,
Right.
Nvidia. A lot of the Apple has had, I think, north of 20% net profit margins for it's probably at least a decade or more. I mean, they've been, even though their sales aren't growing, their profit margins. So, I mean, I don't know. I mean, do you buy that argument that, hey, profit margins can't stay this elevated? I'm not sure I do, because they're different companies.
Yeah, I do think it's very, very different. We always talk about how the landscape changed over the past 20 years. The one that you always bring up that I love is the Sirius XM satellite example. And the market had
tell people about that, Mike. In case they haven't heard it.
I have to steal Derek's thunder here on this one, right? But if you're, and he taught me this, right? So credit here is due to Derek. But if you think about, what was the top, it was the top tech company back in the late 90s. We like to ask people that, and I ask in meetings all the time. Hey, what do you think the top tech company was?
The top weighted in the NDX, the QQQs, in March of 2000. Yeah.
Thank you. Yes, correct. Yeah. March of 2000, late 99, right? The top tech company in the triple Qs, and nobody has an idea, right? They might pick Microsoft. I think I got IBM a couple times, which are good guesses. I mean, if you had to guess, those are some pretty good guesses. But the answer is Sirius XM satellite radio, right?
Yeah.
So, and that's usually shocking to people because I think it's a $4 stock or a $3 stock at this point, and people just can't believe that was the top company in the NASDAQ coming into late 99, early 2000. So, to Derek's point, what he's saying here is that, right, these aren't your typical AT&T kind of stable dividend stocks here that have these high earnings. And I just broke that down, right? Is obviously tech and Mag 7 have a lot higher earnings than the rest of the market. But since that's the case, right, is we're looking at total different suite of companies, Google, Microsoft, Apple, Facebook, or Meta, versus the Procter and Gamble's and the AT&T's and Home Depot's of the world. And I think that's why profit margins are so high. And I do think it's sustainable, right? If you think about, do you think Apple's going to continue to grow? Do you think Meta and Google and Amazon are continue to grow? I think that if you think of it from that perspective, yeah, those companies can sustain these profit levels.
I mean, Amazon's interesting because if we just looked at their consumer, stuff they sell online, like Walmart, I think has made some pretty good inroads there. But what Walmart doesn't have is the cloud computing. They don't have some of the other things that they do, and
the streaming service.
Yeah, I mean, all that. I mean, I don't even know if they make money on that or not. I'm not an Amazon analyst. But you pointed out too. You had sent me over a chart. I mean, what was the difference between the Mag 7 Q4 profit margins and the S&P 500 X Mag 7? Do you still have that?
Yeah, I do.
Third quarter. Yeah, because we don't have full fourth quarter yet.
Right. We're still waiting on the Q4 numbers, but Q3. So just to give everyone perspective, this goes towards our, I guess, I don't know if we're making an argument for it, but it goes towards the idea that maybe equal weight could do well. But if we look at, let's look at profit margins for Q3, X Mag 7. So S&P 500 X Mag 7, 9.3%. So
we just said they're trending towards 11% now.
Yeah, trending upwards, right? So increasing and solid. But if you look at Mag 7 specifically, it's 23.5%. So more than double what the X Mag 7. So the other, 493 stocks in the S&P 500 are doing.
Somebody asked me too, is the reason why these companies have been able to maintain such high profit margins, is it, going back to the Warren Buffett, do they have large moats, meaning, there's a castle, a big moat, you can't get to the castle. So they're protected. I look at these and I think about, well, all right, well, Tesla, they make, electric vehicles, and maybe they're more of a tech company. It's all about the batteries. Google, Amazon, Apple, Meta's the one that's interesting to me though, because had they not bought Instagram, I feel like younger people are not on Facebook. But it's one of those things where, so I mean, do these companies are they such big moats that but then again, like Nvidia wasn't part of the Mag 7
right
5 years ago.
Yeah. I was just gonna say Meta specifically, I think, and I think you've seen the company do particularly well this year. I'm just looking at performance year to date.
Yeah.
So it's up 18% year to date. So I think that's probably leading Mag 7. Now, the one thing that I think Zuckerberg and Facebook are Meta is doing well is they have multiple lines of business at this point. You brought up Instagram, right? WhatsApp, Instagram, Facebook, Threads. They're branching out from just their traditional Facebook. They also seem to be playing ball with the current administration, which I think is what has significantly helped that company in their outperformance. But like you said, I'm not really on Facebook, and I'm actually not that young. But Instagram and all these other areas are why they're doing particularly well.
I want to talk about small caps. Before I do, I don't even know what the market cap of Sirius XM Holdings, Sirius Satellite. So this is crazy. I just pulled up a chart. This is a quarterly chart. So I don't remember what the actual high is, but the close of March of 2000 was $570. Right now it's $25. So think about that. Like this chart, it's parabolic to the upside. And I mean, it's crazy to think like that was the number one weighted company in the NDX. Wasn't Apple, wasn't Nvidia. Nvidia wasn't really on the map back then. Wasn't Microsoft. It was Sirius XM Holdings. I don't even remember their earnings. They might not have even been earning anything because they were paying out a lot of money for acquiring talent back then. But all right, let's talk about small cap. Small cap was the quote unquote the easy trade coming into the year, and I say easy because it was one of those deals where if let's look at the IWM. Year to date, 0.34%, Mike.
Very surprising. I mean, it started off strong. It has definitely pulled back in the recent week or so, a little longer than that. Yeah.
So, all right. I mean, talk about small caps a little bit. Like, so.
Well, I think the story here is right around stronger.
I know you want to talk about unprofitable companies, but there's always unprofitable companies in there.
Well, yeah. So let's hit small cap and even mid cap a little bit, right?
Yeah.
So here's the baseline behind that. Stronger dollar, right? Dollar gets stronger. Who does that affect the most? Derek talked about.
It hurts the big companies, not the small companies.
Right.
Yeah.
Why does it affect the big companies? Well, because they are multinational businesses, right? If you think about McDonald's, over 40% of their business is run in other countries, right? They have locations all over the world. Same thing with Apple and a lot of the other, Mag 7 or S&P 5 companies in general, right? They do a lot of international business. So who does the dollar help? Well, let's go downstream and start looking at the mid-cap companies. Let's start looking at the small cap companies. So that's the theory. Stronger dollar, who does that affect the most? Negatively is the big companies. Positively is mid and small cap. Why? Because they derive the majority of their income from within the United States. Makes sense. Stronger dollar is going to help companies that get their income from the US. But that was the case through January. Now, since then, there's been quite a bit of a pullback here with small cap and mid cap. And it's just very surprising looking at the numbers here. I mean, you're up under 1%, while the S&P's plus 3%.
Yeah. I mean, no, you're right. And also last time when Trump won in 2016 election? Yeah, that was 2016. Small caps was the thing that rallied. So I think this time it was like, oh, they rallied last time, they're going to rally again. And they did well at first, but they haven't since. So I don't know. We'll see. I don't know what to do with small caps.
Yeah, I'm looking here to mid cap. I think really has not done anything well. Also below 1% return year to date. So
All right, I'm going to give you another theory, and one of our clients, I was talking to him recently, and he made the point that a lot of companies that used to come in through the small cap, the small cap door, let's say, these were young companies, exciting companies, had very good growth prospects, but they started out small cap and then they sort of graduated to mid cap to almost S&P level, and they kind of go up. But his point to me, and I think it's a great point, is that many of these companies now are not going public until much later. They are doing venture capital raises. They're doing they're staying private much longer.
Yeah.
So you have to ask yourself, like, the companies that make up the small caps. And look, I'm not a small cap analyst. Neither are you. Like, I'm not in that area. If you asked me to name 20 companies, I could probably do it, but I couldn't tell you their financials. I think it's a really good point. Like, we live in a different world now than we did just 20 years ago, where, I mean, think about like the next biggest IPO is probably SpaceX. That's going to be a massive one if and when that comes public. But so years ago, would that have been a small cap? Would they have taken that to the public markets to raise capital? I don't know. Right.
Yeah. Well, I think there'll be a lot of buzz around it if SpaceX goes public, especially with everything they've been doing. But I mean, this goes back to what we talked about earlier, right? Everybody is waiting for the next story, whether that's small or mid cap or international or value, and it just doesn't. Mag 7 has been the play now for multiple years in a row. A little sluggish this year, but small. I'm just. It did. I'll give the small cap investors this. You had a great start to the year. Unfortunately, you've cooled off a little bit, and now you're underperforming.
All right, let me switch gears. I want to talk a little bit of volatility and options. Let me go through this, and then we can discuss. I don't know if you know this, Mike, but Nvidia reports, I believe, next Wednesday. So it'll be after people hear this. Usually, we release these on Sundays. So, all right, the implied volatility of Nvidia. And these are the options that expire. Let me see which one these are. These are the ones that expire the 28th. So it includes earnings in there. And if I'm looking at the right around the 100 moneyness. So here's a little 101 options, by the way, for the audience. There's a term called moneyness in options. It's a fancy way of just alternatively saying how much an option is in or out of the money. So an at the money option would be the 100% moneyness option. Something 20% below the market would be the 80% moneyness option. Something 20% above the market would be the 120% moneyness option. So you'd say, oh, it's the 120 moneyness. So the 100 moneyness, which is the at the money, the implied volatility is about just around 73. And what that means is 73 divided by the square root of 252, the number of trading days in the year. And we would say the 1 day expected move right now is about 4.6. 4.6. So what does that mean? It means that one standard deviation, 68% of the time, you would expect in a 1 day move. That's what the options market is pricing in. And then since, the market, or we don't actually report until Wednesday, you actually, what did I say, about 4.6, one day move? So, between now and earnings, it's sort of pricing in right around an 8% move. Now, I always tell people, what does that mean? Let's say you don't really have an opinion on Nvidia, and don't do this trade at home because it's a volatility trade. And I like to say a long straddle or a short straddle. It's one of the more dangerous trades because this is a pure volatility trade. And if you don't get the volatility right, it's not going to be good. So let's say you decide to be brave and you're going to buy the at the money call and put, because you're like, I think this is going to move. I don't know which way it's going to move, but I think it's going to move. And what that would tell you is you'd buy this thing for around, I don't know, $11.70. So $11.70 divided by where we're trading right now, about where are we trading? 139.47. 47. Yeah. So you need about an 8.4% move or higher just to break even on this trade. That means if you buy the straddle and earnings don't move it enough, you lose money. If you sell it and earnings make the stock move more, then you lose money. And by the way, if you're selling this thing, you're kind of uncovered to zero on the put side and uncovered to infinity. Although, Mike, I never bought a stock that went to infinity personally. So don't do this trade. Yeah.
Not yet. You haven't
Not
bought.
yet. There's still a chance, you're saying. So I like to, when earnings are coming out, I like to show what the options market is displaying for us. And is this a high implied volatility? Well, I've seen it be higher. But naturally, if you think about, okay, well, implied volatility in the nearer term options, so the ones expiring today, is only about 38% because earnings aren't today. I mean, they weren't, they're not going to happen intraday today. So that volatility will get sucked out of the market once the earnings come out. But I think about Nvidia, like a lot of the big companies, Mike, already came out, but Nvidia is the last one that really can move the market. I think. Like, don't you feel like next Thursday, Nvidia? I mean, look, Nvidia might trade sideways, but I'm going to be really curious to see what they come out with. Like, if they blast the EPS estimates and give good forward guidance, this could be fuel for the markets. It could happen the other way too, where they say, hey, maybe we beat the markets, but our forecast isn't as rosy. So, Mike, I don't know about you, but like I'm going to be glued to the screen Wednesday afternoon when this comes out.
Sure. So what I would say on Nvidia is that it's one of our largest positions between all of the clients that we work with.
Yeah, the clients hold it. We're not trading.
Yeah, not us. Not us. I'm not giving a recommendation here, but client holdings. Yeah, it's one of our largest positions. So just kind of some look at it, right? I'm just painting a picture of Nvidia, right? It's $3.4 trillion market cap. I am a long-term bull personally. Again, not a recommendation. But for it to double again like it did last year, to go to a 6.8 trillion, it would be it may happen, and it may take some time for that to happen. But I'd be a little surprised if that happened in a very short period of time. So if Nvidia kind of bounces around for a while, I would not be surprised, or kind of slowly moves up. The headwind that Nvidia faces is, and some people probably know this, but DeepSeek was kind of the initial kind of scare with Nvidia a couple weeks ago when it had that drop. Now it's actually bounced back nicely and is positive on the year. Just for those that didn't follow the DeepSeek situation very closely, right? Is this Chinese company came out and said, "Hey, we're able to run these AI programs not using the complex GPU or graphic processing unit that NVIDIA produces." So people said, hey, wait a minute, maybe NVIDIA is not needed. I don't think that's going to be the case. I still think they're going to be one of the top chip companies out there. And I know, Derek, you're big in the semiconductor. Maybe you want to touch on that briefly. But, there's some headwinds that could definitely come up, or maybe they did continue to do well, but their guidance is going to drop. So, it's kind of a mixed bag coming into earnings here. I will definitely be glued to the screen. Like I said, it's one of our biggest position client-wise.
Yeah, and just to clarify that, again, we're not proprietarily, we're not prop trading Nvidia, like buying it. What happens is a lot of advisors and some individual clients, they might have either worked at Nvidia, and so they have a bunch of stock with a very low cost basis, or they just bought Nvidia a long time ago. And what happens is, especially in taxable accounts, they may have this big position and they might want to diversify, but if they sell it, they'll take a big tax hit. So, a lot of times we'll run what we call a concentrated stock, position management, where we may sell some upside volatility to generate some income. We can hedge that. So just to clarify for the audience, like Zega Investments is not buying Nvidia for our own accounts.
Correct.
We
I
traded.
was going to say, Derek, I know that we give out your email sometimes. I was going to say, if you have $1 million, if you're an individual investor with $1 million in Nvidia, email Derek.
Yeah, Derek.moore@zegainvestments.com. That's DEREK.MOORE at Z as in zebra, E as in Eddie, G as in George, A as in Apple. Investments is up to you to get correct on the spelling. So, all right, let's. All right, I think we've done enough here. I want to get to recommendations. So I've stolen this from Barry Ritholtz, Mike, and Barry Ritholtz on his master's in business. He always asks when you have a guest on, and Jay and I do it, is he used to phrase it, what are you watching, reading, or I think there was something else. So any recommendations for the audience, like anything you're streaming or reading?
I'm a little behind here on this, but funny enough is I am getting caught up on the Dragons, right? So Game of Thrones, I forget the full name, but it's the Dragons series. So season 2, and I saw that they actually launched all of the seasons, I think. So we are just getting into season 2 of Game of Thrones. I think it's Game of Thrones Dragons. A little slow compared to season 1, but if you're a buyer in the original Game of Thrones, it's definitely interesting.
I haven't done it yet. The original was so good. I don't know if I can do it. Well,
so I caught my wife actually watching the season 8 of Game of Thrones just recently. I said, "What are you doing?" She said, "Oh, I just want to rewatch it. It was so good."
Yeah. And season 8. That's the final season, right?
Yeah, that is the final season. Yeah, I believe so.
By the way, did you ever watch on Netflix? This was an old recommendation from me, but Society of the Snow, about the Chilean rugby team that went down in the
I heard about that.
The Andes Mountains.
I don't think
you got to watch that. That's all you. I you know what? I think you didn't watch it because you were actually going to Chile.
Oh yeah,
you were gonna fly over that mountain pass, and you said, "Let me not watch that."
That's correct. And I'm back safely, so now I can watch it. That's a great idea.
Yeah. Actually, Society of the Snow. And there was a movie, it's for anyone who doesn't know what this is, a rugby team. I think it's a Uruguayan rugby team from Uruguay. And they were flying to a tournament, and their plane goes down in the middle of nowhere in this mountain range. And planes tried to search for them and find them, and they couldn't. So they were out there for a long time, and they had to take some pretty extreme measures to survive. There was a movie. What was it? It was in the 90s they did this, but I think this one's better, and it was on Netflix, so maybe it's still there. And the other thing I would say, it's over now, but I know you didn't watch it, Mike, but USA Canada hockey in the Four Nations tournament. I'm sure you heard about it, right?
No, I did watch it, actually. Unfortunately, I did watch last night. So I did catch a couple of the hockey games. I thought it was really cool. Great series. And I did catch it. Unfortunately, last night, I stayed up and watched the walk-off goal that Canada had.
Yeah, it reminds. So 2010, U.S. and Canada played in the gold medal game of the Olympics. And of course, this is sort of a preamble. Next February, the NHL will be back playing in the Olympics. So you're going to see not only these 4 teams, but all teams. But in that instance, Sidney Crosby scored in overtime to beat the U.S. So it was, I loved it. I thought it was like, I don't even know if anybody watches the NBA All-Star Weekend anymore, but to see these players like care that much, and there was hitting. The first game, there was a bunch of fights.
Yeah.
And these players are best in the world. And it's, as an NHL fan, I rooted for the U.S. because, you and I live in the U.S. But, like McDavid scored that goal. I know you're not a hockey fan. He's probably the best player in the world right now, most skilled player in the world. And he's up there with his ability with some of the greats, I think. And they left him unmarked in the slot for him.
Yeah.
You can't leave him unmarked in the slot. But it was great.
I saw that. And you're right. I'm not a huge hockey fan, but that was exciting hockey to watch. The whole series. Hey, grabbing the best 4, possibly the best 4 teams in the world, and just having a small playoff. I thought it was super cool.
Yeah, it puts the NBA All-Star to shame. Like this was
Totally.
the NHL's.
Totally.
Like, and then you have the NHL guy, the NBA guys, like you have them pulling out, right beforehand, didn't want to play. So, and guys last night,
All-Star weekend was nowhere near as fun as this.
No, I don't even watch that anymore. But this was great. And I don't know if you heard the announcers last night. They said some of these guys were playing so hurt, they may miss significant time with their teams when the season starts again. Like they were playing hurt. It was like the playoffs. So it was cool. And Canada was good win for Canada. And, as an NHL fan, like the cool thing is you're watching players who you watch all year. And it was really good. Yeah. Both teams were really good. A lot of talent.
Again, not even a hockey fan. I would give that a high recommendation for me.
Yeah. So if you haven't, like, go watch the replay. And if you're a real hockey fan, Google 1987 Canada Cup when Canada beat the Soviet Union. What was the Soviet Union back then? And that's where Gretzky, Mario Lemieux, Marc Messier, Grant Fuhr, Paul Coffey, like all these Hall of Famers were on the same team. And that's the only time Gretzky and Lemieux ever played together. So I know you won't be watching that on YouTube tonight, but for any hockey fan, like, for me, it's like 1980 when I watched the 1980 US team win against the Soviet Union. Incredible. That's still number one for me. The 1994 Rangers when they finally won the cup. But the best hockey I ever saw was 1987 Canada Cup. Like watching those teams and seeing them come back, it was unbelievable. So good. So we'll work on you. I got to work on you. I got to work on Jay. For some reason, you still refuse to go to a Panthers game, but maybe this will be the driving force, Mike, that gets you there.
I want to go to if they win again, I'll go to the after party. I'll commit to that now. That's it.
Just go to you had the Stanley Cup Finals last year. You didn't go.
I know we didn't go. It's only the stadium's about an hour from my house, but it would have been worth it for sure.
Look, not everyone's meant to watch world-class sporting events, and maybe that's you, Mike. So, I mean, you could go to Tampa Lightning too. What is that? 3-hour drive?
3.5. But Tampa, really, the whole city shuts down for Lightning's games.
Yeah. Now they've had a great run too, and their coach was the Canadian coach, John Cooper. So Cooper's a great coach. Did a great job. All right, Mike, that's it. Go root for what are we rooting for? Small caps. You can do it, small caps. I don't know.
See if the international continues to run, and then maybe small cap bounces back. But I don't know. Maybe the fire's out there. We'll see.
All right. Send emails, everybody. We like getting emails. Let us know. And don't forget to give only 5 stars. If you're not going to rate us 5 stars, don't do it. But I do appreciate we've gotten more 5-star reviews on Spotify and Apple Podcast. Mike, thanks for coming on. We'll see everyone.
Thanks, Derek.